Hello guys, I hope so you all are doing great and your studies are also going in best mode because only 45 days are left for the exams. Okay, so let's give our best right now. Okay, then in this video we will be discussing like bank audit questions. Okay, so there are around 33 questions in this question bank of like this is compiled by Neeraj sir and his team. Okay, so we will be discussing this question bank whole and try to cover in at least in less than 1 hour or maybe or less if possible, because I will not try to explain anything. Just we will read out the memory techniques that me and my friend have made while reading this once. Okay, so let's start. So yeah, question one: banks, because of certain characteristics, are distinguished from other commercial enterprises, and hence this needs special audit considerations. Okay, as an auditor of bank, specify the various peculiarities which may necessitate the special audit consideration to be taken care by you. Means they are saying as an auditor, like what should you see as an like a special audit consideration in the case of audit of banks. So I have made like this short form right now: salary in TCS, because obviously TCS right now was in so much discussion in the campus placements. Okay, so let's try to memorize in this way. Salary, S stands for voluminous scale of banking operations and the resultant significant exposures which can arise within short period of time. Okay, and then R stands for particular nature of risk associated with the financial transactions undertaken by the banks. Okay, nature of risk associated with the financial transactions that are undertaken by the banks. Okay, then I stands for extensive dependence on IT for process of transactions. Okay, then TCT stands for evolution of technology in providing services through net banking and mobiles has exposed the banks to huge operational and financial risk. Obviously, this is a very practical point. Okay, and then C stands for continuing development of new products and services and banking practices, which may not be matched by the concurrent development of accounting principles and auditing practices. Okay, and last is as various statutory and regulatory requirements. Various statutory and regulatory requirements. Okay, so these are the 6 points that you can easily remember with the short form: salary in TCS. S for scale of banking operations, and R for risk associated with the nature. Okay, nature of risk associated with the transactions. Okay, and I stands for dependence on IT for process, and T stands for evolution of technology and the operational financial risk. Then C stands for continuing development of new products and services, and S stands for statutory and regulatory requirements. Okay, in today's environment, the banks use different applications to carry out different transactions, which may include data flow from one application to another application. Okay, the auditor, while designing his plans, should also understand interface controls between the various applications. Okay, so let's move to next question. Management develops controls and uses performance indicators to aid in managing key business and financial risks. Okay, explain in this reference the requirements of an effective risk management system in a bank. Okay, or the right short note on requirements of risk management process or system in a bank. Okay, so this is the short form. Like I have made the short form like CMROI, like CMROI. Like easily you can remember if this question comes. Then like there is not any harm in covering more questions than regretting later if the question comes in the exam. Okay, so let's start. Okay, because I think while discussing once with my friend, I have cut this out because I couldn't find out in like I say question bank or in the topic in the case one essay book. Okay, so but let's just ignore this thing. Let's discuss it. Okay, because this is given. Like then let's discuss. Okay, requirements of risk management process or system in a bank. So first, C stands for control activities. Banks must have appropriate controls to manage its risk, including the following: what should be included in the managing of risk: effective segregation of duties, verification, approval of transactions, and setting of limits, reporting and approval of exceptions. Okay, exceptions you already know like what that means. Okay, then M stands for monitoring activities. Independent risk management unit should be set up which regularly assess the risk management models, methodologies, and assumptions used to measure and manage the risk. Okay, then R stands for reliable information systems. Banks must have a reliable information system that provide adequate financial, operational, and compliance information on a timely and consistent basis. What they are saying, banks must have reliable information system so that they can timely provide these types of information on a timely and consistent basis to the management and TCWG. Then R हो गया. O stands for oversight by TCWG. Risk management policies should be approved by TCWG. While approving the policies, TCWG should ensure that policies should be consistent with the bank's business objectives and strategies, capital strength, management expertise, regulatory requirements, and the types and amounts of risk as considered acceptable. Okay. So then last I stands for identification, measurement, and monitoring of risks. So risks that may significantly affect the achievement of bank's goals and objectives should be identified, measured, and monitored against pre-approved limits and criteria. So these are the 5 points of this like requirements of risk management process or system in a bank. Just remember this short form in case the question comes out. Like just read this once, CMKRY, and you will get the marks. Okay. The next is, you have been appointed as an auditor of LCO Bank, a nationalized bank. LCO Bank also deals in providing credit card facility to its account holder. The bank is aware of the fact that there should be strict control over the storage and use of credit cards. Okay, how will you evaluate the internal control system in the area of CCO, that is credit card operations of a bank? Like this question has been asked so much, so this is like important question. Okay, so there is also short form that we have made, ESOP. Okay, then credit card operation system of controls in banks. Okay, so how can we evaluate? Auditor should evaluate the IC in the area of CCO of LOC bank as under. there should be like let's just revise in the short form format only. Like what is E stands for like there should be effective screening of applications with reasonably good credit assessments. Okay, so they are saying that before issuing the credit card, there should be effective screening of applications, that the application that is received by the bank from the applicants with reasonably good credit assessments. Okay, so there should be like they are saying the parameters should be very good, like so that they can properly judge the credibility. Okay, then S stands for there should be strict control over storage and issue of credit cards. Strict control should be there over storage and issues. This is a very general point because obviously anyone can write this without even reading. Then O stands for payments overdue beyond a reasonable period should be identified and attended to be carefully. So that, for example, if the credit card payment is like due for more than 50-60 days, then there is a problem now. Like maybe because some banks have like 30 days limit or like something like that. Okay, so you can just practically relate it. Okay, for defaulting customers, credit should be stopped by informing the merchants through periodic bulletins as early as possible to avoid increased losses. Like transactions occur through the use of merchants na, like razor pay or pay you money. Okay, so these are kind of merchants. So they are saying that banks should inform the merchants to stop through periodic bulletins that credit should be stopped as early as possible so that banks can decrease their losses. Okay, then P stands for there should be a system of prompt reporting by the merchants of all settlements accepted by them through credit cards. Okay, obviously I just discussed what is merchant, so merchants should report to the bank. Then last P stands for there should be a system to ensure that statements are sent regularly and promptly to the customer. Like the statements that are banks, like the banks send the statements regularly and promptly to the customers. Okay, that is a card holder, credit card holder. Oh, this was the short form from credit card operations, ESOP. E stands for effective screening. Then S stands for strict control over storage and issue of cards. And O stands for like overdue beyond reasonable period should be identified and attended to carefully and inform the merchants. And P stands for prompt reporting by merchants. And then P stands for promptly to the customer, like statements regularly and promptly sent to the customer. So next question: you are auditing a small bank branch with staff strength of the manager, cashier, and 3 other staff. Like this very small bank, among allocation of work for other areas. S1, who is the PN, also open all the mail and forward it to the concerned person. S1, who is the PN, opens all the mail and forward it to the concerned person. He does not have a signature book so as to check the signatures on important communications. Okay, S2 has possession of all the bank forms, for example, checkbook, demand DD, pay order books, traveler checks, foreign currency cards. He maintains the record meticulously, which you have test checked also. However, no one among staff regularly checks that. Like S2's work is never reviewed by any other staff. Okay, you are informed that being a small branch with shortage of manpower, it is not possible to always check the work and records. Give your comments. So this is a question about internal control system. Okay, banks are required to implement and maintain a system of IC for mitigating the risk, maintain good governance, and to meet the regulatory requirements. So they have given like 3-4 examples of internal control that are being violated in this given question. Okay, so this is not like a rata type question. This is like if you read once, then it will fit in your mind. Okay, let's just read it. S1, they are just saying about a question, opens on the mail, forwards, and does not have signature book and does not check like the implementation and maintenance of IC. As the mail should be opened by a responsible officer, like this is the requirement of the bank, should be opened by a responsible officer, and signatures on all the letters and advices received from other branches of the bank or its correspondence should be checked by an officer with the signature book. Okay, so they are saying that mail should be opened by the responsible officer and the signatures on all letters and advices that are received from other branch or its correspondence should be checked by an officer with the signature book, like they should be checked by the person who is the signature book officer. S2 has possession of all bank form. He maintains record meticulously, but this is not in accordance with implementation and maintenance of general IT control, general internal control, as all bank forms, for example, checkbook, demand draft, pay order books, traveler checks, etc., foreign currency card, etc., should be kept in the possession of an officer. Another responsible officer should verify the issuance and stock of such stationery. Like they are saying that this should be kept in the possession of officer, and another responsible officer should verify the issuance and stock of such stationery. Then next is contention of bank that being a small, this is not this is not a tenable. As such, lapses in internal control pose risk of fraud. This is important. Like this poses the risk of fraud on the bank. Okay. Then next is the auditor should report the same in this report according. That is in the LFAR, I think he will report about this long form audit report. Okay. Next is the compliance with CRR and SLR requirements. Okay, so let's continue. Next question: compliance with CRR and SLR requirements. As statutory central auditors of a nationalized bank, that is SCA, okay, with what special points are to be borne in mind in the audit of compliance with SLR requirements? Okay, so SLR is a very easy question. Like this is not much tough question. Okay, SCAs are required to verify the compliance of SLR on 12 odd dates in different months of fiscal year that are not Fridays, that not being Fridays. This is important. If you know that practically, then it is very good. The resultant report is to be sent to the top management of the bank and to the RBI. To verify the compliance with SLR requirements, the statutory auditor has to examine 2 aspects. First, the correctness of the figure of the DTA, that is demand and time liabilities, at the close of the business on the reporting Friday relevant to the date selected by the auditor, and maintenance of prescribed percentage of liquid assets on the selected date. Okay, so next is the steps of verification. Like how will you verify the SLR requirements? Obtain an understanding of relevant circulars of RBI so as to ascertain the items to be included in the composition of DTL. Oh, wait a second, let me just revise in this format only. CU circular in the RTI. So this is the short form that we have made. C stands for examine the composition of items of DTL. Composition of item DTL as per circulars instructions of RBI. So this is the C. Then U stands for understanding, obtain understanding of the relevant circulars that we have already read. Okay, now CU circular in RTI. R stands for request the branch auditors to verify the correctness of the trial balances and examine the cash balance at the branch on the selected dates. Okay, so examine the cash balance at the branch on the selected dates. Okay, then T stands for examine on a test basis the consolidations regarding detailed position prepared by the head office with reference to the related returns received from branches and ensure that any consolidations prepared by the bank include the relevant information in respect of all the branches. In respect of all the branches, information included. Then I stands for ensure that the interest accrued but not accounted for in the books is included in the composition of DTL. Okay, like demand and time liabilities, it is included. This thing is included. Interest accrued but not accounted for. Okay, so this was the short form, like CU circular in RTI. You can also remember like from you specify number of unaudited branches and the statement that auditor has relied on the returns received from the unaudited branches in forming his opinion. So this was the short form. The next is verification of investments. Your firm has been appointed as SCSA, okay, of a nationalized bank. The bank follows financial year as accounting year. Your auditing manager informed that bank has recognized an accrual basis income from dividends. Okay. Your auditor manager informed that bank has recognized on accrual basis income from dividends on securities and units of mutual funds held by it as at the end of financial year. Then next is the dividend on securities and units of mutual funds were declared after the end of financial year. Then comment. Income from dividend on shares of corporate bodies and units of mutual fund should be booked on cash basis. This should be booked on cash basis and not on accrual basis. Okay. Income from dividend on shares of corporate bodies and units of mutual fund should be booked on cash basis. Then in respect of income from government securities and bonds and debentures of corporate bodies, where the interest rates on these instruments are predetermined, income should be booked on accrual basis, because interest rates are predetermined. Income should be booked on accrual basis, whereas in case of dividend on shares of corporate bodies and mutual funds, it should be booked on cash basis, provided interest is serviced regularly and as such is not in arrears. Okay. Banks may book income from dividend on shares of corporate body on accrual basis. Means there is an option given to banks on this, like to a book on accrual basis, provided dividend on the shares has been declared by the corporate body in its AGM and the owner's right to payment is established. This is also in accordance with AS9. Okay, so they are saying like this is the form of simple similar to government grant. Like if the grant becomes receivable and you have the like high probability that the grant will be receivable, then you can account for it on accrual basis. Like they are saying the provided dividend on the shares has been declared and in the AGM and the owner's right to receive, like the shareholder's right to receive is established. Okay, so next conclusion in recognition of dividend income on securities may be recognized on accrual basis if the same has been declared and right to receive established. In this case, the dividends were declared after the end of financial year end. Therefore, recognition of income by the bank on accrual basis is not in order, because they are saying that dividends were declared after the financial year end. Before the financial year end, they were not declared. Then how can you say that you have the right to receive? You have the right to receive only after the end of the financial year. Okay, so don't recognize on accrual basis. So this was the like important question. Like, you can, it's a tricky question. Like if you don't properly read the question, like this line, if you don't read, then you are gone. The next is ABN Bank was engaged in the business of providing PMS to its customers, for which it took prior approval from RBI. Okay, your firm has been appointed as the statutory auditors of the bank's financial statement for the year 23-24. Your senior has instructed you to verify the transactions of PMS. While verifying the transaction, you noticed that bank has not maintained separate record for PMS transactions from the bank's own investments. Then as a statutory auditor, what methodology will be adopted by you for verification of PMS transaction? Like this is a very bookish question. Obviously, if you know this procedure, practically also if you know, then you can automatically write it without even reading it. Then separation of investment functions. The auditor needs to examine whether the bank, as required by the RBI, is maintaining separate account for the investments made by it on their own investment account, PMS clients accounts, and on behalf of other constituents, including the brokers. Okay. Also, as per RBI guidelines, banks are required to get their investments under PMS separately audited. Investment under PMS separately audited by an external auditors. Okay, they are saying that like the auditor needs to examine whether bank is maintaining separate accounts for investments on own investment account, PMS client account, and on behalf of others. 3 types of account auditors should check. Then in the instant case, ABN Bank is required to prepare separate records for PMS, and as per RBI guidelines, PMS investments need to be audited separately by the external auditors. This we have already read here, and the auditors are required to give a certificate separately for the same. Auditors are required to give certificate separately for the same. Okay. Then conclusion: auditors should not verify the PMS transactions and advise the bank to segregate the PMS transactions from its own investments and provide a certificate of external auditor as described above. In a case ABN Bank does not provide the same, the auditor may report accordingly. Okay, so in this question, they were saying that auditor should not verify, but it should, and the auditor should advise the bank to segregate the PMS transactions first and provide them the certificate that we have read here, described above. In case it does not provide, then auditor will report accordingly. This is like important question, like you have to read it in the end. The next is verification of advances. C. Harshit is conducting statutory auditor of branch of a public sector bank, say SBI. Okay, then on examining 20 large advances of the branch, he finds that in 5 examined cases, loan applications have been filled up scantily, like with the very like dhyan se nahi kiya, with important details left out. Okay, in these cases, it is also noticed that cash credit limits to the borrowers were enhanced during the year, but there are no records pertaining to assessment of enhanced working capital requirement. They are saying that it is noticed that cash credit, like the CC limits to the borrowers, were enhanced during the year, but there are no records pertaining to assessment of enhanced working capital requirements in respective borrower files. The branch is also unable to show such assessments working in a system either. However, all the 5 accounts are operating satisfactorily. There is no problem in the accounts. These accounts have been classified as standard assets. Okay, and would above information prompt the auditor to suggest change in asset classification of above accounts? What does the depicted situation reflect? Tell. Okay, an account becomes NPA when it ceases to generate income. So the income has not been seized because all 5 accounts are operating satisfactorily. So the income has not ceased. Okay, then in the given situation, all the 5 accounts operating satisfactorily, there is no reason for suggesting changes in their classification. The matter of scantily filling up loan applications and lack for record for assessment of enhanced working capital requirements shows that internal control over advances in branch is not proper. The above said situation shows deficiencies in credit appraisal at branch level, and such deficiencies need to be highlighted by the auditor in LFR. Like this is the only the important point in this question, because obviously if you read this line, then you get to this answer that asset classification should not be changed. Okay, then this shows that internal control is not proper. This is just the conclusion of this question. This is very easy part. This is like the part that you have to remember. Okay, so next question. ABC Bank had sanctioned CC limits of 100 lakhs to Volcart Limited on this date. The renewal of was due on this date, like after 1 year, while doing the statutory branch audit for the year ended this 31st May 24. That is after 2 years from the maybe after 1.5 years you can say. You find that the renewal has not been done even though 180 days are over. Okay, 180 days though they were way back over. Okay, the bank says that the renewal process has been initiated on time and most of the documents are received. The account is operated regularly and is in order. Balance is maintained within drawing power, and it also shows a letter from Volcart stating that due to sudden death of their auditor, a new auditor had to be appointed, and procedure for appointment took some time, and the new auditor was doing the audit all over again. Okay, the limit was not renewed till 31st March 24. Okay, that we already know. Okay. However, the audited financials are received on 10th April and a renewal letter was issued immediately. Like they have issued the renewal letter, so there is no delay by the bank. Just as soon as they got the audited financials, and they just send the renewal letter immediately. And your assistant is insisting that the account must be classified as NPA. Say our article is saying that sir, please classify it as NPA now, since the limit was not renewed on 31st March. What is your opinion? What will you say as an audit senior, like the senior of the article? As per guidelines of RBI, the account should be classified as NPA if renewal is not done in 180 days. In the present case, operations in the account are excellent. Operations are working very perfectly. Bank has shown a letter from that company that due to certain reasons, the audited financials are delayed. Further, the limit has been renewed before signing the audit report. Okay. Obviously, we know that limit was renewed on 10th April. Okay. Thus, even if the sanction was issued after the balance sheet date, it relates to the position as on the balance sheet date. Like this is the adjusting event, and therefore it is an adjusting event under AS4, or it is also in in the Ind AS 10. Okay, currently. Okay, because this question I think relates to past years. Okay, contingency and events occurring after the balance sheet date. It is also a matter of substance over form. Okay, the auditor would consider classifying the account as standard asset. Okay, this is important. Like this is a matter of substance over form. You have to look in within the transaction. Like what is really is there anything wrong going? Okay, but there is nothing wrong going on, so the auditor will not classify it as at NPA. The National Shore Firm has been appointed as CSA of a nationalized bank. The bank follows financial year as accounting year. The bank is a consortium member of CC facilities of 50 CR to X Limited. Okay, then bank's own share is 10 CR only. Okay, so the total consortium is you can say there are 4 banks. They have given the collective loan to say you can to Geo Limited. Okay, then this is a consortium. Okay, so they are saying that based on the total was this facility 50 crore to total facilities 50 crores given to Geo. Okay, then X Limited bank's own share is you can say 10 CR. Okay, and to that yes, during the last 2 quarters against a debit of 1.57 CR towards interest, the credits in X Limited accounts are to the tunes of 1.25 CR only. Like X Limited, if they are saying that X Limited has made the payments of 1.5 CR in the 2 quarters, but the incomes are only 1.25 CR against these payments. Okay, based on the certificate of lead bank, the bank has classified the account of X Limited as performing. Like there are in the consortium there are 4 banks now, so there is one lead bank. Okay, so the lead bank certificate they have obtained, and it has classified as an performing asset, not as NPA. And advise your views on the issue which were brought to your notice by your audit manager. Okay, the bank is a consortium member of CC facilities. Okay, this is question lines. Okay, sometimes several banks form a group. Okay, this is the consortium definition. You can say under the leadership of lead bank to make advance to a large customer on some same conditions and security with proportionate rights. In such cases, each bank may classify the advance given by it according to its own experience of recovery and other factors. Since in the last 2 quarters, the amount remains outstanding and thus interest amount should be reversed. This is despite the certificate of lead bank to classify the account as performing. Accordingly, the amount should be shown as NPA. Okay, like because obviously this is if you know the concept that if the lead bank classifies in some way, but you have not to follow like the lead bank, what is lead bank doing, you can apply your own judgment, like your past experience with that with giving loan to that company or any firm. Okay, so you have to apply your own judgment, the company has to apply its own judgment. Last 2 quarters, amount remaining outstanding and interest amount should be reversed. This is despite the certificate of lead bank as performing, then accordingly classified as NPA. This is also important question because lead bank line can confuse us in the exam. Okay. Yeah, question number 11. In course of audit of Fair's Samaritan Bank, as at 31st March 24, you observed that in a particular account there was no recovery in the past 18 months. The bank has not applied the NPA norms as well as income recognition norms to this particular account. Okay, when queried, the bank management replied that this account was guaranteed by the central government and hence these norms were not applicable. Okay, the bank has not invoked the guarantee, and they are also asking that would your answer be different if the advance is granted by state government? Or yes, answer would be different because in central government advances, until the government the government invokes its guarantee, so we don't change the asset classification. But in the state government advances it is different. Like also there is one more point. Let's read the answer for that. The classification of GGA, government guaranteed advances. If a GGA becomes NPA, then for the purpose of income recognition, interest on such advance should not be taken to income unless the interest is realized. However, for purpose of asset classification, credit facility backed by CG guarantee, though overdue, can be treated as NPA only when the CG repudiates its guarantee when invoked. Okay. So this is a conceptual thing. Okay, since the bank has not invoked the guarantee, the question of repudiation does not arise. Hence, the bank is correct to the extent of not applying the NPA norms for provisioning purpose, but its exemption is not available in respect of income recognition norms. Okay, so for the asset provisioning, this exemption is available, but in respect of income recognition, this exemption is not available of CG guarantee. Hence, the income to the extent not recovered should be reversed. Okay, so income part should be reversed, but the asset provisioning norms, like the asset classification, should not be changed because of the guarantee still there. Okay, but that dues are being there is no recovery in the 18 months. Okay, so since the situation would be different if the advance is guaranteed by SG, because this exception is not applicable for SGG. Okay, where advance is to be considered NPA if it remains overdue for more than 90 days. In the case the bank has not invoked the CG guarantee, though the amount is overdue for long, the reasoning for the same should be taken and duly reported in LFAR. Okay, this is an important point. CG, there is only one exemption you can say for the asset provisioning, but income recognition you have to reverse, and for SG you don't have any of these. Okay, the next is in the course of audit of Skip Bank Limited, you found that bank had sold certain of its NPAs. Okay, bank had sold the NPAs. Draft the points of audit check that are relevant to this area of checking. Okay, so next is also what audit points CA should keep in mind while doing the audit of these transactions. Okay, there is also a sale of NPA. Okay, in the course of audit sold certain NPAs. Okay, so they are asking sale of NPS. There is some normal points, and there are also a few additional points. You can automatically remember this once we discuss. So let's discuss in the short form format. NOC without 2 years. NOC without 2 years. So N stands for subsequent to the sale of NPA. Bank does not assume any legal, operational, or any other type of risk relating to the sold NPAs. Okay. And then O stands for the bank has not purchased an NPA which it had originally sold. Like the bank first sold and then it should not repurchase it back. Okay. The next is the NOC. C stands for NPA has been sold at cash basis only. Okay, under no circumstances NPA can be sold to another bank at a contingent price. Okay, the price should be decided at day 0 only, and the payment should be also made on day 0 only. There should not be any contingent price. Okay, and there is no contingent payment. The entire sale consideration has to be received on an upfront basis. Okay, so this NOC without means assets have been sold or purchased without recourse only. Bank does not assume any responsibility after selling selling the NPA. If the seller you can say the buyer of the NPA, if he is not able to recover the NPA, then he can't get to the bank that please help me recover, because this is without recourse only. Okay, that is the entire credit risk should be transferred to the purchasing bank. Okay, then 2 years only such NPA has been sold which has remained NPA in the books of bank for at least 2 years. Okay, so this was the a simple short form NOC without 2 years for the sale of NPA by bank. NOC without 2 years. Then additional points are also there. If the sale is at a price below the net book value, the shortfall should be debited to the P&L of that year. Then if the sale is for higher value than net book value, the excess provision shall not be reversed but will be utilized to meet the shortfall or loss on account of sale of other NPAs. Okay, because obviously every NPA shall not be sold above the net book value. Okay, so that provision should be reversed, should not be reversed, and should be adjusted from the sale of the other NPFs. Okay, non-performing financial assets. And these are the points to be taken into consideration for the purchase of NPAs. That is, the auditor should verify that NPA purchase has been subject to provisioning requirements appropriate to the classification status in the books of the purchasing bank, and any recovery in respect of an NPA purchased from other banks is first adjusted against its acquisition cost, and only the recovered amount in excess of acquisition cost has been recognized as profit. Okay, they are saying that recovery in respect of NPA purchased first adjusted against acquisition cost. For example, you purchased the NPA for say 100 lakhs, okay, and the amount recovered is like only 20 lakhs right now, and so they are saying that you should adjust this, like purchase cost is now reduced 80 lakh and only the recovered amount in excess of the acquisition cost has been recognized as profit. Say you then recover 120 lakhs, okay, then the profit is like 40 lakhs, then you recognize the profit, okay, because the acquisition cost has been adjusted fully. So next is for the purpose of capital adequacy, banks have assigned 100% risk assets to the NPAs purchased from other banks, okay, because there is no surety that we will be able to realize, so they are saying that 100% risk weight should be applied while purchasing, okay. Next is the bank's advanced portfolio. It comprised of significant loans against life insurance policies, okay. Write suitable audit program to verify these advances, okay. They are saying the bank's advanced portfolio comprised of significant loans against, loans against, this is the question about loans against life insurance policies, okay. Audit program to verify advances is under. Auditor should inspect the policies and see whether they are assigned to the bank and whether such assignment has been registered with the insurer, okay. And this is like auditor should inspect the policies obviously, and whether they are assigned to the bank, like whether they are in the name of the bank or like the bank can exercise them or not, and whether such assignment has been registered with the insurer, like whether in reality the policy is registered with the insurer, na. The next is the auditor should examine whether premium has been paid, okay, on the policy and whether they are in force, like there should not be like the policy has expired or policy has surrendered. This should not be the case, okay. A certificate regarding surrender value obtained from the insurer should be examined, okay. The auditor should particularly see that if such surrender value is subject to payment of certain premium, the amount of such premium has been deducted from the surrender value, okay. So they are saying that auditor should particularly see that if such surrender value is subject to payment of certain premium, the amount of such premium has been deducted from the surrender value, okay. He will see all the points are met, okay. Policy देखेगा like the assignment assigned to the bank, okay, and registered with the insurer, or the premium has been paid and whether they are in force, and certificate regarding surrender value obtained from insurer, and like if surrender value is subject to payment of certain premium and such premium has been deducted. Next is advances generally constitute a major part of the assets of the bank. There are a substantial number of borrowers to whom the variety of advances are granted. The audit of advances requires major attention from the auditors. Okay, as an expert in bank audit, you are required to briefly discuss the area of focus and suggested audit procedures regarding the evaluation of internal controls over advances, substantive audit procedures, and recoverability of advances. Okay, so this is MTB number 23 question. Okay, let's see audit procedures in carrying out our audit of advances. Auditor is primarily concerned with obtaining audit evidence about the following. There are around 3 points, like evaluation of internal controls over advances, substantive audit procedures. Okay, then recoverability of advances. Okay, so the standard procedure for evaluation of internal controls is examine the loan documentation. So this is the short form DEL TV. Examine the loan documentation, examine the existence, enforceability, and valuation of the security. Okay, D. And L stands for ensure compliance with loan policy of bank as well as RBI norms, including appropriate classification and provisioning. Okay, and T stands for ensure compliance with the terms of sanction and use of fund. Okay, and V stands for examine the validity of the recorded amounts. Okay. Next is substantive audit procedures. Check that advances represent amount due to the bank and verify that advances are disclosed, classified, and described, okay, in accordance with the recognized accounting policies and practices and relevant like the regulatory requirements. Check that appropriate provisions toward advances have been made, okay. Appropriate provisions have been made, okay, and examine all large advances while other advances may be examined on a sample basis, okay. Verify the completeness and accuracy of interest being charged and ensure that there are no unrecorded advances, okay. Then check that stated basis of valuation of advances is appropriate and properly applied, and that recoverability of advances is recognized in their valuation. And check whether the amounts included in the balance sheet are outstanding as on the date of balance sheet date. Okay. Next is recoverability of advances. What procedure auditor will apply? Review the periodic statements submitted by borrowers. This is SSRR. Review the periodic statements. Review latest financial statement of borrowers. Review reports on inspection of security. Review audit reports in case of borrowers having credit facilities from the bank system beyond the cutoff limit fixed by board of directors of bank. Okay. This was general question, like Ratta question only. There is nothing illogical. Then Messrs S Limited is MSME unit. The company does multiple banking. Company is availing CC limit from UBank of 25 CR and availed remaining the limit availed remained less than 5 CR during all days of financial 23-24. Okay, company has not done any credit in cash credit account during the year as it is operating current account in newly opened another bank branch adjoining to company's premises. Company is having sufficient security of stocks and debtors and DP of 25 CRs remaining all over the year. Company is availing term loans from other bank branches. Okay, now the bank manager insisting to route the sale proceeds through UBank. Otherwise, CC limit and term loan accounts with other banks will be treated as NPAs. This is like important question. Like this can confuse you if you haven't read earlier. Like this confused me. Okay. Now company seeks our opinion. Okay. Classification of account as NPA in case of multiple banking. So an advance will be classified as NPA if it ceases to generate income for the bank and interest or installment of principal in respect of such advance remains overdue or out of order or for a specified period of time remains overdue or out of order. Okay. Then amount is said to be overdue if it is not paid on due date fixed by the bank. Okay, the amount is said to be overdue if it is not paid on the due date fixed by the bank. An account should be treated as out of order if the outstanding balance remains continuously in excess of the sanction limit. They are saying account should be treated as out of order if the outstanding balance remains continuously in excess of the sanctioned limit or DP, or if there are no credits continuously for 90 days as on the balance sheet date, or the credits are not enough to cover the interest debited during the same period. Okay, like this is the overdue definition, like when the account is said to be overdue. Okay, let's just mark this. Okay, overdue. Then next is prudential norms on asset classification provides that in case of consortium advances, each bank may classify the advance given by it according to its own experience of recovery and other factors. Then they're saying in the present case, companies availing CC limit from UBank of 25 CR. The limit availed remained less than 5 CR during all the days of financial year 23-24. The company has not done any credit in cash credit account during the year as it is operating current account in newly opened another bank branch. Okay, the company is availing term loans from other bank branch. Now the bank manager is insisting, okay, on doing this. Okay, conclusion, CC facility with UBank need to be classified as NPA as there are no credit in the account to serve the interest charge in the account. Classification of term loan with other banks depends upon the payment made to that bank. Okay, so this is important, like confusing question because they haven't clarified clearly. Thus they have written this overdue concept and just given the answer. Okay, in the course of stat auditor or stat branch audit of Case Bank Limited, you observe that some borrower accounts have been regularized before balance sheet date. So this is a concept, different concept, regular accounts regularized before balance sheet date. Okay, so this is a question like by payment of overdue amount. Narrate the audit procedures to be carried out with special focus on the classification of advances and provisioning for NPAs of the branch. They are saying that narrate the audit procedures to be carried out with special focus on the classification of advances and provisioning for NPAs of the branch. The audit procedure that need to be carried out with special focus on classification of advances and provisioning for NPAs of Case Bank Limited, in which the auditor has observed that some borrower accounts regularized before balance sheet date are as under. As per RBI guidance, if an account has been regularized before the balance sheet date by payment of overdue amount through genuine sources, account need not be treated as NPA. Like if the payment is made, through genuine sources, account need not be treated as NPA. Okay, next is where subsequent to a repayment by the borrower, which makes the account regular, the branch has provided whether funds to the borrower, including by the subscription to debentures or in other accounts, the auditor should carefully assess whether the repayment was out of genuine sources or not. Now they are saying whether subsequent to repayment, okay, branch has provided further funds to the borrower. Okay, the branch is again lending. Okay, auditor should carefully assess whether the repayment was out of, like again auditor will check whether the repayment was out of genuine sources or not. Where the account indicates inherent weakness based on the data available, or the account shall be deemed as NPA. Like if there is a 1% chance, like if there is inherent weakness on the basis of data available, then we will treat it as NPA. Then classification and provisioning. Examine whether the classification, we shall in the short form only segregate CCNN. Segregate, we have made the short form, segregated correctly. Examine whether the secured and unsecured portion of advances segregated correctly and provisions may have been calculated properly. Okay, segregate CCNN, that is, examine whether the classification made by the branch is appropriate. Particularly examine the classification of advances where there are threats to recovery. Okay, they are saying particularly examine the classification of advances where there are threats to recovery. Okay, then CCC, another C stands for ensure. This is also classification. This is also classification. This is to be ensured that classification is made as per the position as on date, and hence classification of all standard accounts to be reviewed as on balance sheet date. Okay, they are saying classification is made as position as on date. Okay. Then NN stands for date of NPA is significant to determine the classification, and hence specific care to be taken in this regard. Okay, then NPA should be recognized only based on past due or overdue concept and not based on balance sheet date. So, okay, so I think the short form should be like this. This is not CCNN. The short form should be CCDP. DP we can easily remember, DP, D and P. This is a past due or overdue concept. Okay, CCDP. Okay, segregate CCDP. Okay, this is the short form for this. Because they have asked that like narrate the audit procedures with special focus on classification of advances and NPAs. Okay, so next is Gupta and Company has appointed as stat auditor of TCB Bank Limited, a private sector bank registered with RBI. Mr. Kaiwal, engagement partner, while performing the audit as per checklist, noted down the following points, which would be part of the audit queries as tabulated below. Okay, so the serial number first is interest on SG guaranteed advance has been taken to income even though such advance has remained overdue for more than 90 days. Okay, so they are saying that interest on SG guaranteed advance taken to income even though advance remained overdue. This should be treated as NPA because we have already studied this in question that we discussed above. Okay. And then there is an account for which an ad hoc limit has not been reviewed for 180 days from the date of such ad hoc sanction, and such account has been treated as performing asset. Okay, ad hoc limit not reviewed. I think this should also be treated as NPA. And then one of the NPAs was sold for a value higher than the net book value. Okay, profit was not recognized, but the excess provision in respect of the same has been reversed. They are saying one of the NPAs were sold for higher than the net book value. Okay, then correctly profit was not recognized, excess provision reversed. Okay, they have saying excess provision in respect of same has been reversed. No, I think the provision should also not be reversed. It should be like utilized for the future purchase sale of the advances. NPAs. Okay, then in case of one of the accounts, additional temporary limit has been sanctioned for 25% of the existing limit and for 120 days tenure. There is also limit like 25% is right, but the tenure is not right. We shall discuss this below. On verification of outstanding forward exchange contracts, net position in respect of one of the foreign currencies was not squared and was uncovered by a substantial amount. Okay, you are required to provide the reasons due to which such queries would have been raised by Mr. Kaiwal and describe the actions that may be taken by the person responsible on behalf of TCB Bank for solving such queries. Okay, so these are the 5 points. Okay, let's first discuss. This is interest income recognized on such advance would be reversed, okay, and would be taken to income only when it is realized, right? And this advance has to be treated as NPA even if it remains overdue for more than 90 days. And in case of NPA, for the purpose of income recognition, interest on such advance should not be taken to income unless interest is realized. Okay, then account for which ad hoc limit has not been reviewed for 180 days should be treated as NPA. Yes, right. It is treatment in the books. Its treatment in the books would be changed from performing to NPA from the date when such change in the treatment was required. Okay. In the case of sale of NPA, where the sale is for value higher than the net book value, auditor is required to ensure that no profit recognized. Yes, the bank has not recognized the profit and excess provision has not been reversed, but retained. Yeah, this is we have already studied above. Okay, that excess provision need not be reversed, but has to be retained to meet the shortfall loss that may arise because of the sale of other NPAs. Okay, the entry for reversal would be cancelled in the books, and such excess provision should be retained to meet the shortfall loss that may arise in the future. Okay, then additional temporary limit may be sanctioned for 20%. Okay, so 25% was wrong, and 29 and 120 days was also wrong. Limit is 20% for the additional temporary limit, and 90 days. Okay, this is the 20% and 90 days. Okay, the terms of additional temporary limit would be revised to 20% and 90 days maximum tenure. And net position in respect of each of the foreign currencies should be generally squared and should not be covered by a substantial amount. The net position of the branch in relation to each foreign currency should be squared off and get covered by a substantial amount. Okay, this was the question. Like, this is the MCQ oriented question. Next is Mr. Adi Company, Chartered Accountants, have been allotted the branch audit of a nationalized bank for the year ended this. You are part of audit team and have been instructed by your partner to verify the following areas. Fulfillment of the criteria prescribed for NPA norms for government guaranteed advance. Okay, they are saying fulfillment of the criteria prescribed from NPA norms for government guaranteed advance. Okay, if the government guaranteed advance GGA becomes NPA, then for the purpose of income recognition, interest on such advance should not be taken to income unless the interest is realized. We have also read this above. However, for purpose of asset classification, like the credit facility which is backed by CG guarantee, even though overdue can be treated as NPA only when CG repudiates its guarantee when invoked. This exception is not available for state government guaranteed advance, where advance is to be treated NPA if it remains overdue more than 90 days. The next is fulfillment of criteria prescribed for NPA norms for advances given for agriculture purpose. Okay, for agriculture. So one second, in the case of bank has not invoked CG guarantee, though the amount is overdue for long, reasoning for same should be taken to LFAR. That is long form audit report. Okay, LFAR. Okay, the next is agriculture advance. Ensure that NPA norms have been applied in accordance with the crop season determined by the state level bankers committee in each state, and depending upon the duration of crops, short term, long term, raised by an agriculturist. NPA norms would also be made applicable to agricultural term loans availed of by them. Then also ensure that these norms are made applicable to all direct agriculture advances listed in master circular. Then in respect of agriculture loans, other than those specified in the circular, ensure that identification of NPAs has been done on same basis as non-agricultural loans advances. Sorry, this is like a general question, very general question. Okay, DP calculation from stock statements in respect of working capital accounts. They are saying ensure that DP is calculated as per the extent guidelines, that is the credit policy of the bank. Okay, special consideration should be given to proper reporting of sundry creditors for the purpose of calculating DP. Okay, they are saying special focus should be given to sundry creditors for the purpose of calculation of drawing power. Okay, next they are saying is or stock audit should be carried out by the bank for all accounts having funded exposure of more than stipulated limit. Okay, they are saying stock audit should be carried out by a bank for all accounts, like all accounts audit should be done having funded exposure of more than stipulated limit. The report submitted by stock auditors should be reviewed during the course of the audit, and special focus should be given to the comments made by the stock auditors on valuation of security and calculation of DP. This is like irrelevant para, so I have cut it out already. Okay, so next is limits not reviewed. Accounts where regular ad hoc limits are not reviewed within 180 days from due date, because obviously we read earlier we earlier read ki limits of ad hoc were not reviewed, okay, from the date of ad hoc sanction. So this is like the answer for that. This is like the answer, fourth answer. Let's just read it. Limits not reviewed. Accounts where regular ad hoc limits are not reviewed within 180 days from the due date or date of ad hoc sanction should be considered as NPA. Okay, auditor should also ensure that ad hoc or short reviews are not done on a repetitive basis. Okay, like there should not be something like that you are reviewing it on a very short intervals. Okay, next is Prachi was conducting stat audit of a branch of nationalized bank for the financial year this, while reviewing operations of documents of papers of borrower enjoying overdraft facility of 50 CR availed against security of stocks and book debts. Following were jotted down. Balance in OD facility as on this date was 55.65 CR. Okay, like it has crossed the limit. Balance in account exceeded sanction limit during the whole month of March. As per terms of sanction letter, stock or book debt statements were required to be submitted monthly. देन she like उसको क्या मिला, प्राची को क्या मिला, लेटेस्ट अवेलेबल स्टॉक बुक डेट स्टेटमेंट फॉर द मंथ ऑफ February showed drawing power of 48.5 CR only. Like this is the only like the limit within which the bank should give, but currently they have given the OD facility 55 point, like the bank current, this is the outstanding amount. Okay, then however stock book debt statements of previous months showed adequate DP. Like they are saying that adequate DP was there in the previous months, but the latest one shows this statement. Okay, stock audit of borrower was also conducted during the year by one of the impaneled stock auditors of the bank. Okay, stock audit report dated this placed on the record showed adequate DP in the account. However, it has commented adversely on the declining turnover of borrower. Like they have given the hints like the turnover declining in the future. Okay, till the date of stock audit report as compared to the proportionate turnover in preceding year. Okay, the next is the renewal of overdraft facilities was due on this date. The account was short renewed by competent authority for a period of 3 months pending submission of complete papers. They are saying that a renewal of OD was due on 20th October. The account was short renewed by competent authority for a period of 3 months pending submission of complete papers. Okay. However, borrower has not submitted complete renewal paper till the year end. Also, it did not submit the borrower. There is a request letter from borrower on record stating that valuation report of property located at far away location was taking time. That's why he wasn't able to send the renewal papers. The branch is very convinced, like they have classified as a standard asset. So but the CA Prachi ji is in dilemma relating to proper classification. Like this is a good question. Like ICAI wants to ask the question like this. Okay, so this can come in number 24 exams. So the borrower was enjoying OD facilities of 50 CR against the security of stock and debts. Further, though latest available stock statement for the month of Feb showed inadequate DP, there was adequate DP available throughout the year. And stock audit report also reflected adequate DP. Hence, it shows that borrower had adequate DP during the year. Like they are ignoring this Feb month calculation. They are saying that during the year there was adequate limits. Okay. Next, they are saying further commenting on declining sales of general informative value to the management for making credit decisions. The fact of overdrawings in account during the month of March and inadequate DP in a month are in nature of temporary deficiencies and do not require account to be classified as NPA. Like they are saying that overdrawings in account, inadequate DP, they are like temporary deficiency and do not require account to be classified as NPA in accordance with asset classification and provisioning norms of RBI. Then RBI instructions lay down that ordinarily credit limits need to be reviewed not later than 3 months from the due date. But as per guidance note on audit of banks, in case of constraints such as non-availability of financials and other data from borrowers, the branch should furnish evidence to show that renewal of review of CC limit is underway and would be completed as soon as possible. Okay. In any case, delay beyond 6 months is not considered desirable. Okay. They are saying like we have given you like the extended period but not beyond 6 months. Okay, hence an account where the CC limit have not been reviewed or renewed within 180 days from the due date will be treated as NPA. It would be pertinent to note that counting of 180 days would be required to be done from the date of original due date for renewal and not from the date of expiry of short reviews or technical reviews. Okay, in the instant case, original date of renewal was 20th October and period of 180 days still not expired as on balance sheet date. Okay. Then keeping in view all the above factors, CA Prachi should accept the classification of account as standard asset made by the branch. Okay. Then they're saying you are okay. So the CA Prachi should accept the classification as standard. Like there is nothing wrong. Okay, because they have explained with the provisions. Next is you are part of engagement team conducting stat audit of branch of nationalized bank, say SBI. Okay. During the course of audit, it has come to your notice that there is large number of cash credit accounts in the branch. Many of the cash credit accounts are only partially utilized during substantial part of the year. Okay. However, in the month of March, the accounts are fully utilized. Okay. They're saying first many of the CC accounts only partially utilized during substantial part. However, in the March month only, they're fully utilized. Okay. On further scrutiny, it is observed that these account holders have made FD from these utilized amounts at the end of the year. These deposits have been liquidated in the first week of April of next financial year. Comment upon how the situation would be dealt by US statutory branch auditor. Like what is I saying? Like borrowers have withdrawn the money and they put this money in the FD accounts and then again repaid them back in the April month first week. Like so that the interest is not calculated, I think. Then in the given case, many of the CC accounts in the branch are only partially utilized during substantial part of the year. However, in the March month, accounts fully utilized and they are written in the question language. This is an example of window dressing. The branch is resorting to window dressing by artificially boosting its advances and deposits. Like this is not borrower thing that is doing. This is thing done by branch itself. The utilization of advances and placing of FDs at the end of the year in branch and again liquidation of deposits early next year indicated branch is resorting to window dressing to inflate its advances as well as deposits artificially. The auditor has to verify whether the unavailed portion of the credit facilities, that is overdraft CC limit, are used to boost the loans and deposits which might tend to amount to window dressing. Okay, the relevant regulatory guidelines also prohibit such type of practices and these might involve penal action in terms of Banking Regulation Act 1949. This is like important question. You have like this can come. Okay, auditor is required to suitably report a matter in an audit report and commented in affair also. In appropriate cases, making a suitable qualification in the main audit report is also to be considered. Okay. Okay. So next question we will discuss in like 1 minute. Okay, guys. Next question: bot limit is enjoying CC facility sanctioned from Nariman Point, Mumbai branch of KNB Bank for 250 CR. However, for practical considerations, various sublimits have been fixed for the borrower company for operation at Solapur, Pune and Nashik branches of the same bank. Okay. The manager of the Solapur branch notices that there are no credit transactions in sublimit account being operated at the Solapur branch for more than 90 days as on this date. Then discuss the approach of CM Muni, statutory branch auditor of Nariman Point branch of KNB Bank in the matter of asset classification of the above borrower account. Also discuss considerations for classifying said account at the Solapur branch. This is like important question because these are like that questions. If you know the concept, then you can solve. Sometimes the customer is sanctioned a CC limit at one branch but is authorized to utilize such overall limit at several other branches also, for each of which a sublimit is fixed. In such a case, the determination of status of the account as NPA or otherwise should be determined at the limit sanctioning branch with reference to the overall sanctioned limit or DP and not by each of the other branches where sublimit has been fixed. Okay, like they are saying that determination of status of account should be like the main should be like they should be as per the limit sanctioning branch. Like for say example, like A is the branch. Okay, so next question 21. Bot Limited is enjoying CC facility sanctioned from Nariman Point, Mumbai branch of KNB Bank for 250 CR. However, for practical considerations, various sublimits have been fixed for the borrower company for operation at Solapur, Pune and Nashik branch of the same bank. The manager of the Solapur branch notices that there are no credit transactions in sublimit account being operated at Solapur branch for more than 90 days and at year end. Discuss the approach of CM Muni, statutory branch auditor of Nariman Point branch bank Mumbai of KNB Bank in the matter of asset classification of the above borrower account. Also discuss considerations for classifying the said account at the Solapur branch. Okay, then sometimes the customer is sanctioned a CC limit at one branch but is authorized to utilize such overall limit at several other branches, for each of which a sublimit is fixed. Then they are saying in such a case, determination of status of the account as NPA or otherwise should be determined at the limit sanctioning branch with reference to the overall sanction limit or DP and not by each of the other branches where a sublimit has been fixed. Then auditor of limit sanctioning branch should examine whether it receives particulars of all transactions in the account at sublimit branches and whether status of the account has been determined considering the total position of operation of the account at all concerned branches. Then the standard on matter of no credit transactions for more than 90 days as on 31st March at Solapur branch is irrelevant. Hence, keeping in view above, CM Muni should consider asset classification considering the total position of operation of the account at all concerned branches. Okay. Then regarding sublimited branches, the classification adopted by the limit sanctioning branch should be followed. Okay. Hence, the Solapur branch has to follow asset classification made by the limit sanctioning branch. Okay. Like they should go what the limit sanctioning branch has to say about the asset classification. Okay. So this was this question. Next question is Messrs. CAS and Associates have been appointed as one of the statutory central auditor, that is SCA, of this bank for this financial year. During the course of audit, the auditor found that the bank has a balance with Zurich-based bank, that is Switzerland-based bank. The auditor understands that such balance is of matter of important consideration in the audit of bank. Being head in charge of the assignment, while planning, you distributed the work among your team members and assigned Mr. Ansh for verification of balances in account of the bank situated in foreign country. However, Mr. Ansh, being fresh to the bank audits, needs your guidance. Okay, so he needs our guidance to guide him regarding how to check the balances in account of banks situated in foreign country. Okay, there is a short form. Short form is, I think, for this only review. So there are 3 points: verify, review. You can remember like VRC or CRV. You can remember in any form. It is easy for you. First, verify the ledger balances in each account with reference to the bank confirmation certificates and reconciliation statements as at the year end. Okay, and then review the reconciliation statements and pay particular attention to the following: that is, clear large bills, debit credit. Clear large bills. Clear से क्या हुआ? Examine that no check sent or received in clearing is outstanding. Okay, no check that is sent or received is in clearing is outstanding. And next is large. Examine large transactions in interbank accounts to ensure that no transactions have been put through for window dressing, particularly towards the close of the year. Like we were seeing in another question, like bank was like increasing the OD limit and increasing the FD count of that borrower. Okay, so this was kind of strategy of the bank to like window dress the advances. Okay, next is clear large bills. Examine that all bills or outstanding checks sent for collection and outstanding as on the closing date have been credited subsequently. Okay, then debit credit. Examine that no debit for charges or credit for interest is outstanding. All the items which ought to have been taken to revenue for the year have been so taken. Next is examine that no checks credit examine that credit I think, yeah, credit is also here in this point itself. Sorry, yeah, clear large bills, debit credit. Next is check whether these balances are converted into Indian currency at the exchange rates prevailing on the balance sheet date and ensure compliance with relevant accounting standard. So you have to remember it like the converted into Indian currency at the balance sheet date exchange rates. Okay, next question: while auditing Fair Bank, you observe that a lump sum amount has been disclosed as contingent liability collectively. Okay, you are therefore requested by management to guide them about the disclosure requirement of contingent liabilities for bank. Okay, So the short form is that exchange debts and investments in Goa. Okay, so very like crazy short form, exchange debts and investments in Goa. Okay, the third schedule to banking regulation requires the disclosure of the following as a footnote to the balance sheet. Like this is like the contingent liability what they have written in the Banking Regulation Act. Okay, claim, sorry, exchange what by exchange, yeah, liability on account of outstanding forward exchange contracts. Okay, next is debts. Okay, claims against the bank not acknowledged as debts. Okay, next is investments, liability for partly paid investments. Next is in Goa, G stands for guarantees given on behalf of constituents in India or outside India. Next is other items for which the bank is contingently liable. Next is acceptances, endorsements and other obligations. Okay, so this was the like the short form for this question: exchange debts and investments in Goa. Exchange forward exchange contracts liability and liability for like the claims against banks not acknowledged as debts. Okay, next is investments, liability for partly paid investments, and Goa, guarantees given on behalf of constituents in India, outside India, and other items for which bank is contingently liable. This is like general point: acceptance, endorsement, other obligations. Okay, we have revised this twice, so you should not forget it whenever this question comes. Remember this: exchange debts and investments in Goa. So Indo Bank appointed your firm of chartered accountants as a branch auditor for the financial year 23-24. Okay, sure. Indo Bank appointed your firm of chartered accountants as a branch auditor for the financial year this, being head in charge of the assignment. While planning, you distributed the work among your team members and assigned Mr. Perry for verification of bills payable. However, Mr. Perry, being fresh to the bank audits, needs your guidance. Kindly guide. The short form is SRCC, and this is a short form for the main question. And there is a like the C is like in like effectiveness, existence, effectiveness, and continuity of internal control. That is EC of IC. This is another question. This is a short form for that. Okay, then. Yeah, just read it like SRCC stands for examine an appropriate sample of outstanding items comprised in bill payable accounts with the relevant registers. So what the question was about, like a verification of bills payable. Okay, so that's why we are talking about bills payable. That is examine an appropriate sample of outstanding items comprised in bill payable account with the relevant registers. Okay, so SR, R stands for reasons for all outstanding debits in respect of drafts or other similar instruments paid without advice should be ascertained. Okay, then SRCC stands for correspondence with other branches after the year end should be examined, especially in so far as large value items outstanding on the balance sheet date are concerned. Okay, then C stands for internal controls, and this is a different question, and for that question also we have made a short form, that is standard sign of private officer. Standard sign stands for standard printed forms, that is draft, mail transfer, traveler checks should be made out in standard printed forms. Okay, standard printed forms. Okay, next is sign. Sign stands for like the signatures on demand draft should be checked by an officer with the specimen signature book. This was also a point that we discussed in the case study above in some questions. Okay, next is the sign of private. Private stands for bank should have a reliable private code known only to responsible officer of its branches. Coding and decoding of the telegrams should be done only by such officers. This is like you can say a redundant point because nowadays there are no telegrams. Okay, and then officer stands for unused forms relating to draft, traveler checks and mail transfer, you can say, should be kept under the custody of a responsible officer. Okay, so these are the 4 points. You can also remember that all telegraphy transfer and demand drafts issued by the branch should be immediately confirmed by the advices to the branches concerned. Okay, so this was this question. Your firm has been appointed as CSA of the nationalized bank for this year during the course of audit. In our audit team observed that lump sum amount has been disclosed as contingent liability. Okay, so they are saying highlight the points or checklist that are to be covered in the management representation. Wait a second. Though the components are correctly identified. Okay, they are saying that lump sum amount as contingent liability, though the components are correctly identified. In respect of contingent liabilities, auditor is primarily concerned with seeking reasonable assurance that all the contingent liabilities are identified and properly valued, and the audit firm intends to obtain a representation from the management. Okay, so this is not about the contingent liability. This is about what you will write in the representation to be taken from the management regarding the contingent liabilities. Okay, so in respect of contingent liabilities, auditor is primarily concerned with seeking reasonable assurance. Okay, this is the question line repeated. Auditor should obtain representation from management that. Okay, I think the short form is all off balance sheet AES, that is off balance sheet, because there is a 3 repeated point now. All BST, that is off balance sheet, accounted, entered, supported. Okay, and disclosed 2 times and not disclosed 1 time. This is like a trick to remember this question, that in the representation from management regarding the contingent liabilities, what you will write. So the first point is all off balance sheet transactions have been accounted in the books of accounts as and when they taken place. Okay, then all off balance sheet transactions entered into after following due procedures. Okay, and all off balance sheet transactions supported by underlying documents. Then all year-end contingent liabilities have been disclosed 2 times. The second discloses or that disclosed contingent liability do not include any crystallized liabilities which are of the nature of loss or expense. They are saying that whichever liabilities have crystallized, like they are now the company has to pay, then they should not be disclosed as contingent liabilities. They should be shown in like proper way, like they are like expense or loss, and which therefore require creation of provision or adjustment in the financials. Okay, so disclosed 2 times and not disclosed 1 time. Not disclosed is such contingent liabilities which have not been disclosed on account of the fact that possibility of their outcome is remote include the management's justification for reaching such a decision in respect of those contingent liabilities. Okay, because this is a crucial area, na? Because management is saying that we are not disclosing these contingent liabilities because of this reason, and you just get justified with that reason. Okay, so other point I have cut it because they are not that relevant. Okay, next is question 26. Messrs GH and Associates have been appointed as CSA of BNB Bank, a nationalized bank headquartered in New Delhi for 23-24. Okay, bank functions in automated environment using FLC software. While preparing the audit report, one of the partner highlighted that some matters covered by the Companies Act 2013 and the requirements of Companies CARO 2020, you are required to answer the following. To which authority auditors should submit their audit report? Auditors should submit their audit report to central government. Okay, in case of nationalized bank. Okay, the report is required to be submitted to central government. Okay, and list the matters covered in under the Companies Act 2013. Reporting, because they have asked about question about a nationalized bank, so they have answered about nationalized bank only. Okay, next is a list of matters covered under the Company Act. Okay, reporting requirement under Company Act are not applicable in case of nationalized bank. Not applicable in case of nationalized bank. However, in case of banking company, following matters need to be reported. Okay, matters as stated in 143(3) of Companies Act 2013. Adequacy and operating effectiveness of the internal financial control, that is IFC, under 143(I) of the Companies Act. Okay, then other matters required in accordance with Rule 11 of the Companies Act, Companies Rule 2014. Okay, so next is reporting requirement under CARO. Reporting requirements relating to the CARO are not applicable to a nationalized bank or to banking company. This is important. Like, you have to remember this. This is the MCQ type question. Okay, if you don't remember this, then you might take the wrong option. Okay, this is important question. That is reporting requirement do not apply to banking company or to nationalized bank. Okay, next is concurrent audit system. Okay, so this is like the, I think, last topic for this chapter. Okay, let's see. You are conducting the concurrent audit of branch of public sector bank. It is a large branch having advances of about 500 CR, including export advances of 300 CR. Okay, some borrowers also get a letter of credits issued from the bank for importing new raw diamonds from diamond hubs of Belgium. You want to be sure that there is no revenue leakage in branch. Okay, for the time being, you are focusing upon advances and discussing 5 areas pertaining to advances of the branch which you would verify to ensure no revenue leakage. Okay, so this is a question about revenue leakage, like 5 areas we have to tell to advances of the branch pertaining to advances which that we would verify as an auditor so that there is no revenue leakage. Okay, and 5 areas in this regard where concurrent auditors audit procedure should be focused. Okay, that is no revenue leakage. The short form is like low IPS, low IPS. Okay, interest rates. You can also remember like interest, stock, overdue, process fees, LC charges. Okay, but the short form should be low IPS, low IPS. Like IPS officer ko low IPS. Areas of advances which need to be verified as under. L stands for letter of credit. Verification of charges commission in respect of letter of credit issued in accordance with bank's circulars or manual. You can also remember this point, like you just have to remember the letter of credit and you can write, like, because in AFM in the forex chapter we solve the question like where a bank issues LC and we have to pay him the commission. So you can like just write that, verify that commission in respect of LC issued in accordance with bank circulars. Okay, then low. O stands for overdue. Verification of overdue interest on export bills purchased and packing credit facilities for overdue period. Okay, and IPS. I stands for interest rates fed in the system need to be verified with respect to corresponding sanction letters. It would help ensure that correct rate of interest is fed into the system and interest is applied properly at stipulated intervals on advances. Okay, then IP stands for processing fees in respect of freshly sanctioned advances and renewed limits need to be levied in accordance with bank guidelines, and these need to be verified. They are saying processing fees in respect of freshly sanctioned advances and renewed limits need to be levied in accordance with the bank guidelines, and these need to be verified, and any revision in processing fees from time to time has to be given effect to in accordance with the circulars and manual of the bank. Then last, S stands for stock statements. Sanction, or you can also say sanction of CC limits, is generally accompanied by a stipulation to submit stock statements. Non-submission of stock statements can involve levying of penal interest, and verification of this aspect is required. The next is question 28. ABC Chartered Accountants have been appointed as concurrent auditors for the branches of Effective Bank Limited for this year. You are part of the audit team for Agra branch of the bank and have been instructed by your senior to verify the advances of the audit period. Okay, they are saying you are part of the audit team for Agra branch of the bank and have been instructed by your senior to verify the advances of the audit period. You are required to guide your assistant about the areas to be taken care while doing the verification during the current period. Okay? They are saying how will you verify the advances as a concurrent auditor. So the short form is SSP, Misutilized Banks LC. SSP, Misutilized Banks LC. Okay, S stands for ensure that loan advances have been sanctioned properly in accordance with the delegated authority. The next S stands for ensure that securities and documents have been received and properly charged or registered. Okay, so next is P, ensure that post disbursement supervision and follow up is proper, such as the receipt of stock statements and installments, recovery, renewal of sanction limits, etc. The next is misutilized. Verify whether there is any misutilization of the loans and whether there are instances indicative of diversion of funds. Okay, so the first point was sanctioned properly, loan advances and security and documents received properly and received and properly charged, and ensure that post disbursement supervision and follow up is proper. And next is verify whether any misutilization of loans and whether there are instances indicative of diversion of funds. Then next is banks. Check the bank guarantee issued, whether they have been properly worded and recorded in the register of the bank, and whether they have been promptly renewed on the due dates. Okay. Next is LC. Check whether the letter of credit issued by the bank are within the delegated power and ensure that they are for genuine trade transaction. Like they should not be from illegal transactions. Okay. So you can also read the other points, like ensure proper follow up of overdue bills of exchange, and verify whether classification done as per IBA guidelines. Verify whether claims to DICGC and ECGC are submitted on time, and verify the instances of exceeding delegated powers have been promptly reported to controlling or head office by the branch and have been confirmed or ratified at the required level. Okay, so this was this question. Next question: you have been appointed as concurrent auditor of nationalized bank. The main business is dealing in foreign exchange. Suggest the main areas of coverage with regard to foreign exchange transactions. Okay, foreign exchange transactions need to be verified with reference to RBI guidelines. I think we discussed foreign exchange question earlier as well. So what was that question, and what is the difference? I want to just see the difference in the question. Okay, yeah, balance in account of bank. Okay, this is the balance in account of bank situated in foreign country. But here we are we are checking the foreign exchange transaction, main areas of coverage with regard to foreign exchange transaction. That was the foreign bank account that we have to audit. But here we are covering the we are auditing the foreign exchange transactions. So the short form is NOFA. Yeah, you can make any other. This is somewhat a little bit different short form. So NOFA. No stands for ensure that balances in N stands for nostro accounts in different foreign currencies are within the limit as prescribed by bank. They are saying ensure that balances in nostro accounts in different foreign currencies are within the limit as prescribed by the bank. Okay. Then they are saying ensure that overbought or oversold position maintained in different currency is reasonable considering the foreign exchange operations. Okay. They are saying overbought or oversold position maintained in different currencies is reasonable. Okay. And considering the foreign exchange operations. Then F stands for check foreign bills negotiated under LCs, that is letter of credits, and examine extension and cancellation of forward contracts for purchase and sale of foreign currency. Okay. Ensure that they are duly authorized and necessary charges have been recovered. Okay. They're saying examine the extension and cancellation of forward contracts for purchase and sale of foreign currency and ensure that they are duly authorized and necessary charges have been recovered. Okay. So next A stands for ensure adherence to the guidelines issued by the RBI or head office of the bank about dealing room operations. Okay. So this is the short form. You can also remember any other point if you want to remember. Like this is important question. Like this is little bit language is different, so I'm marking that important. Next is explain the scope of concurrent audit of a bank with reference to the RBI guidelines. Scope of concurrent audit. The detailed scope of concurrent audit should be clearly and uniformly determined for the bank as a whole by the bank's central inspection and audit department and bank's audit committee of bank. Okay. Then in determining the scope, importance should be given to checking high risk transactions having large financial implications as opposed to transactions involving lesser amounts. Okay. The detailed scope of the concurrent auditor may be determined and approved by the audit committee of the board of the directors. Okay. Further, the guidelines issued by the RBI cover all the key areas of activities of the branch which is under concurrent audit. Most banks have prepared an audit manual for this purpose, and this is like a general question. I would not recommend reading this question again. Okay. So these are the three remaining miscellaneous questions. CAFinal is appointed as stock auditor of Bhavani Rice Mills Private Limited, availing credit facilities from this branch of this society. The borrower is enjoying CC limit of 12 CR from branch against security of paid stocks and debtors up to 90 days against margin of 25%. Okay, I think we remembered like 20% and 90 days is the limit. We remembered in this question. Okay, because in this question there was given 25% and 120 days. Okay, so this was the limit that needs to be taken care, because the limit seems to be exceeded for this margin. She proceeds to visit the premises of this company located on outskirts of Delhi. She verifies the books of accounts and stock records of the company and also test checks the quantity of paddy and rice of 20,000 quintals and 8,000 bags lying in premises of the company. And drawing power of 12.05 CR is computed in stock audit report, and report stands submitted to bank. Okay. Then after about a week, regular internal inspector appointed by inspection department of bank also happened to visit premises of the borrower and found that rice contained about 5,000 bag having approximate value of 1.5 CR was fungus ridden. Like obviously this is waste. The company was holding the stock for last 15 months. Okay. How do you view the above situation? This is like an important question because the test understanding questions of every chapter are almost important. The above situation reflects that professional work of stock audit was not performed diligently, okay, by the stock auditor. It is one of the important responsibility of stock auditor to verify the condition of stocks. Okay, this is one of the important to verify the condition of the stocks. Then auditor's role is not limited to verify physical quantities only, and in the given case she should have got open rice bags on test check basis, and in the process she should have come to the know about fungus ridden conditions of the rice. Value of such rice should have been excluded while arriving at value of stocks for purpose of computation of DP. It shows that she has failed to perform her work diligently, and DP calculated in report submitted to bank is not proper. Like the C has not carried out its work properly, so this is a failure on her part. Okay. Okay, so next question is 32. Second last question. PQS and Associates, one of the joint auditors of CAfinal Bank for this year. While auditing CAfinal Bank, they are analyzing the industry data relating to NPS in select public sector banks as part of risk assessment procedures. Okay, then name of the bank, gross NPS, net NPS, ratio of net NPS to net advances. Okay, so in the above context, what do you understand by gross NPS and net NPS as on the reporting date in the construct of financial statements? As an auditor of CAfinal, what inference would you draw by comparing the ratio of net NPS to advances with other public sector banks? Okay, so this is the highest in this case. Okay, CAfinal Bank. So we shall talk about this in this question. Gross NPS represent opening balance of NPS as increased by fresh NPS during the year and reduced by upgradations, recoveries, and write-offs. Yeah, exactly. And net NPS arrived at after deducting the amounts on account of total provision held against NPS or balance in the interest expense account to park accrued interest on NPS and certain other adjustments. Okay, the net NPS to net advances ratio is higher in the case of CAfinal Bank as compared to other public sector banks. It shows that there is a risk that the bank could not have made the required provisions in accordance with RBI guidelines. Okay, a higher net NPS to net advances ratio indicates the probability and risk of under provisioning, like the bank has under provisioned itself. Okay, the next is keeping in view the above, audit procedures have to be tailored towards the examination and verification of this crucial area. This is like important question. That's why I say now asking these types of questions. They're the understanding based question. Like if you know the concept, then only you can answer. Next is CA Sundaram is engagement partner conducting a stat audit of nationalized bank. The bank operates on the CBS platform and the identification of NPS, a system based in accordance with RBI guidelines on asset classification. Okay. He wants to be assured of satisfactory operation of internal control in this aspect. He wants to be sure that there exists an internal control system in the bank which not only prevents and reduces the risk of loan assets becoming NPA at the initial stage, but also sends out timely signals to the bank subsequently. Like the system seems to be very good in the bank. Okay, he is putting considerable importance on the effective credit appraisals due to their role in preventing NPA slippages. Okay, while carrying out a walkthrough of an internal control over advances of banks, especially in areas of credit appraisals and credit monitoring, identify any 4 specific controls which you may be looking for. Okay, credit appraisal and credit monitoring. Okay, so these are the 4 controls that we will look for. Okay, these are the 4 controls. The short form is REST. Following controls may be considered in areas of credit appraisals and credit monitoring for ensuring that internal control over advances is effective, and the system is capable of not only preventing and reducing the risk of NPS at the sanction stage itself, but also sending out timely signals to the bank. They have just repeated the question language. REST stands for R, reporting of repayment behavior of borrowers in their loan accounts to credit information companies, and inclusion of this information in the credit appraisal and decision making process for further sanctioning of loans to the borrowers. Okay. Then E stands for institution of comprehensive automated EWS, that is early warning system in banks with EWS triggers to detect stress and reduce slippage into NPAs. Okay. Then S stands for classification of accounts as special mention accounts, SMAs, for early recognition of signs of incipient stress resulting in default in timely servicing of debt obligations. Okay, it can enable the banks to initiate timely remedial actions to prevent potential slippages into NPAs. Okay, the last is use of third-party data sources in the bank for comprehensive due diligence at the sanction stage itself to mitigate risk on account of misrepresentation and fraud. Okay, they're saying use of third-party data sources in the bank for comprehensive due diligence at the sanction stage itself to mitigate the risk on account of misrepresentation and fraud. Okay, so these were the 4 points by which ensuring that by which we can ensure that internal control over advance is effective and system is capable of not only preventing and reducing but also sending out timely signals, like in the areas of credit appraisals and credit monitoring. REST is the short one. REST, repayment behavior, early warning system, special mention accounts, and third party data sources. REST. These were the questions. Okay, so thank you guys for watching this video. I think I will not discuss the MCQs in this video because MCQs are somewhat easy that everyone can handle, but the questions are somewhat difficult to like do on their own because the questions are 33 questions are there. Okay, so these were the questions that we have discussed. Okay, just do these questions and go with the bank audit, and you can like bang on in the November 24 exams or any further exams for that you are watching this video. So thank you guys. Like the video, share, subscribe the channel. Okay, bye bye guys, thank you.